Hello everyone, myself Vaibhav. In today's session of Visual Jforex, I will be continuing with the demonstration of the algorithm development on the Visual Jforex platform using the indicator named linear regression angle. Let's get started for the day. This is the Visual Jforex board which has been developed by the Dukascopy Bank SA so that we can develop the algorithm and then run it on the live or demo account as per our requirement. So far in prior sessions, we had reached this level where I have done the instrument subscription, then the position amount has been defined at 0. That means all the prior orders or the open position amount should be equal to 0. Only then the new trade will take place. Then I got these linear regression angle blocks defined on the hourly time frame with the look back period, each defined differently for the three blocks 1, 3 and 5 to carry out the comparison between the linear regression output values. Historical candles data to look at the price action, how the price action has unfolded, whether there is enough of momentum on the buy side or on the sell side as per our requirement. And to pinpoint the exact entry and exit, we will be also utilizing the 10 seconds historical candles along with the hourly candle. Then I carried out this calculation to make sure there is enough of buy side momentum for the buy side trade and there is enough of selling momentum when we are looking for the short sales trade, and also to make sure that stop loss and target price is in line with the volatility. Here I have decided to keep the stop loss and the target price is dynamic, and to do that we are relying on the difference between the last hourly candle open and the candle close price. So that is going to be acting as our stop loss and target price. Now in today's session we will get on with the build of sell side. Here in prior session I had set the conditions for the buy side. Now again let us go back to the indicator blocks where we need to carry out the comparison. So I will explain to you the logic behind this on the chart. This is the Euro USD chart on the hourly time frame, and the linear regression angle has been plotted on this chart. And for a sale trade, the requirement is that earlier the linear regression angle value should have been on the rise, and afterwards, whenever it starts to decline, we see if it is in the initial phase and if there is enough of selling momentum, the trade has to take place. To do that, the linear regression angle with a shift value of 1 will be compared to the linear regression angle out value with the look back period of 3, and this should be lower. The recent value should be lower than the prior value, and then the other condition is going to be that a linear regression angle value of lookback period 3 should be greater than the linear regression angle value of the lookback period 5. That means it was rising earlier and now it is going into the tailspin. It is starting to decline, and this is the time to look for fresh shorting opportunities and to make sure there is enough of selling momentum, there is enough of selling pressure. I will also be looking at the last 3 hours open and closing price, and the difference between these two values should be good enough, and for that 12 pips have been chosen for defining the volatility. You can change the value, but I think 12 pips is representative enough. Let us now take a couple of if blocks. Okay, here this line 13 value should be less than line 14. First thing first, it should be less, first input less than second input, and in line 14 should be greater than line 15. Again, a block is required. First input greater than second input. First input is greater than, okay. And then I will take into consideration the calculation which I had carried out in earlier session. The difference between the opening and the closing price should be good enough. For that, the condition has been set. So this should be greater than the minimum pip difference of 12 pips. Okay, so again here I will take two more if blocks. First input greater than second input, and coming to now for precise entry and exit, we will have to take into consideration the 10-second candles closing values and compare it to the hourly candle close. The trade should be initiated when the price action starts to move below the last hourly candle close, and to make sure that is the case, I will take candle 20's closing value. So here is candle 20, its close needs to be put as second input in both the blocks. And now candle 19's and candle 18's closing values are also needed. And here is candle 19's closing should have been greater. It was on the higher side and then it dropped below the candle 20. That means candle 18 close should be less. And then comes the open at market. First input less than second. So far so good. Now let me arrange these blocks where they belong. Okay. And now we have to define these input values. For the sell side, default instrument will remain as it is, default trade amount also as it is, slippage I will change this to 2 pips. And now comes the question of defining the stop loss and the take profit. On the buy side, we had made it dynamic by defining the difference between the opening and the closing value. But when there is a decline in the price, the result of this calculation of BCD will be negative, and we can't really keep a negative value as our stop loss and target price. This value should be positive, and to make sure that is the case, instead of taking the difference between the closing and opening value, the calculation will be inverted, and we will be looking at the difference between the uh, means I will be deducting the closing value from the opening value, so we will have a positive difference, positive outcome. And for that I need to carry out the fresh calculations using the mathematical component calculation expression. Two more blocks will be needed now. Here it is. SCD, and we will multiply it by SLP. SLP is 10,000, 10 raised to the power 4, and this will be, let me take a look one more time. Okay, this looks fine, and here the result should be A1 into A2 and then comes the take profit. Take profit needs to be twice, so again the same thing, just multiply it by 2 and you will have the target price SCD, and it needs to be multiplied by SLP. And okay, so here is SLP and TPM. TPM is a new variable with the value of 2, so this will double the result, A1 into A2 into A3. Okay, now I will have to create two variables with the data type of integer, as we need to define the stop loss and take profit in integers, and then we will put those variables to retrieve the result of this calculation. Okay, I will create a new variable, sell side sell, and this will be here, and this will be sell side TP, take profit. Okay, I'll join these blocks now. So with this, our setup is ready. The stop loss price and the take profit price have been dynamically defined for the sell side also. So you can now take a look on the final build. Five conditions are required for the execution of any trade, either on the buy side or on the sell side. This is fairly simple to build, and I hope you will try out on your own to see how it will be executing the trades on historical data as well as in the real time. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on the market developments. See you tomorrow. Goodbye.